What Your Bank Doesn't Tell You, a podcast by UMushroom.
Hello, everybody, and welcome back to our podcast, What Your Bank Doesn't Tell You. Today, we are in this beautiful Zunfthaus zu Rüden in the city of Zurich, and I'm very happy to have David Suda, the CEO of Green Bridge Metals. And today, we attended a very interesting company presentation, and I'm very glad to have an additional chance to talk to you. Welcome, David.
Thank you very much for having me.
I learned a lot about commodities over the past few weeks, and it was very insightful to get even more into the real business, into the very physical business when it comes to commodities. And this is kind of a different thing than investing in paper commodity. So can you explain me, how did you come from the financial industry into this very physical business? And where do you see the differences between the physical commodity, the real business, and what we know from the financial markets?
Well, I started in finance, so I was in the paper markets, and we were structuring companies or we were raising money for companies so that they could go out and they could extract or discover, first of all discover, and maybe extract resources like oil, gas, copper, gold, and we were separated from the actual extraction. So sitting at a desk and, for example, trading stocks in companies that either want to explore, develop, or produce these physical things kind of puts you at a distance from the actual thing in the end. It took many years before I was able to actually go to a site to see copper being mined or a gold bar being poured. But it's that part that made me fully understand and realize that none of the things that we talk about or the paper that we trade, it may represent these things, but it takes an appreciation for the fact that the world actually needs them physically. There's a lot of talk about the greening of the energy grid, decarbonization. People want to have the latest, best electric car, maybe more so in Vancouver than in Zurich. But, if you have an iPhone or an electric car, or you want to consume power that is not being produced from burning natural gas, then the metals that are required in those processes are growing in the amount that they're being consumed historically. So our parents didn't need as much copper as we need today for the growth of not only the population, but also the increased growth that's being caused by this greening of the grid. So I use copper as an example. I think when you think about gold, a lot of people, when they think they're buying gold, they may purchase some kind of a gold index fund, but they're not actually holding the gold physically. And over time, what is happening now is that with deglobalization, some breakdown of the real validity of the paper, people are really starting to want to actually hold these commodities in their hand.
No, I fully agree, and I believe for gold we have seen this trend already some years back. Maybe it started in the financial crisis for the broader audience to realize that physical gold is kind of different than the paper gold. But it's very interesting to see that basically the thinking translates also into other commodities. And if I may say so, you are a quite young company, and of course there is the need for physical commodities. But how do you get into this market as a quite fresh player?
Well, you have to have resources. You have to have contacts, experience. For my entry was very straightforward. I was on a path of working to raise money for companies that were going out exploring for these products. And so as I went along that path, and I was separated from them by the fact that we were trading stocks of companies that are looking for these metals, I, over time, gained an appreciation for the fact that, some of these companies, when they're successful in finding the metals, and then they're successful in developing a mine or ultimately operating a mine, that out of the end of it comes something that somebody physically holds in their hand. So I've always had a hard time understanding cryptocurrencies. I missed that trade because I didn't understand it. It was too new for me. So I look at the people that are younger than me today who are investing in AI stocks, and they understand chips, and they understand cryptocurrencies. Those are things that I don't understand. They're things that I can't touch.
It was not physical enough, no?
Well, I just missed the trade because I didn't understand it. So what I would love to see is I would love to see an audience that perhaps has not participated to invest in companies that are going to produce these physical commodities that are needed and demanded, simply because that's just not where they're focused. They don't really, they're not, it doesn't seem interesting, or they missed that trade. They probably weren't even alive when most people made money, buying and selling commodity stocks, so to speak. And I think, what's going to happen very rapidly, it's why I use the example of, the electric car, the iPhone, or whatever these products are, where, the younger generations who are much more comfortable investing, for example, in cryptocurrencies or in AI technologies, if they're doing that using an iPad, I hope they recognize that those metals that are in the iPad didn't just jump out of the ground.
Yes, that's what we are saying many times. Also, when it comes to the entire discussions about sustainable investing, always also the question, how is your lifestyle? And many people, they don't realize that their consumption requires all the metals, but also energy, etc., everything.
Exactly, and because their lives require that, if we can reach out to audiences and just ask them to take stock of the things that they touch every day, and recognize that there are opportunities to invest in the production of those things, then that's a whole opportunity they probably don't even consider or think about. And it's always great to be early to a trade. And so, the company that I presented today, Greenbridge Metals, is a company that's exploring for copper, nickel, and vanadium and titanium. These really important metals. They're highly demanded globally. There's a whole audience of people who aren't even aware that there's an opportunity to invest. So I think, if you want to be early to something, then that's why we have a small company that's just exploring, because that's where the biggest amount of value creation is. It's in the discovery. As Mr. Steiger says, it's a lot more difficult to make a $2 billion company a $4 billion company than it is to make a $10 million company a $40 million company. So we're in this, we're talking about coming to something early. I would tell my kids that they should be looking at investing in mining stocks, because they're an opportunity to be part of providing, these vital physical commodities, and they're early to the trade. And then they can also be early in the trade by investing in companies, that it's a riskier investment, but the returns are also, can be astoundingly huge. And that's especially for younger people that are, they have their whole lives ahead of them. They have the opportunity to take part in some of these early trades, but you also can invest in producing companies that have made their discoveries, they've developed the assets, they've got permits, and they've built the mines, and they're producing copper, and they're producing gold, and they're producing silver, and that's a different risk profile. But still, there is a very small audience for those today.
Maybe you can go a bit further into that. I mean, here in Switzerland or in Europe, many people might know Glencore as a company, and a huge company, and in different fields in the commodities industry. Maybe you can explain your company I know it's a big difference, but maybe to understand a bit better what part of the business you are doing in comparison to such a large company like Glencore.
Well, the main thing that those of us who are doing what we are at Greenbridge, and there are many other participants in that kind of market, not just in management, but shareholders across all this suite of smaller explorers. We all share with Glencore, the thesis that there is a value to a number of different commodities, and you can invest in them and also make a lot of money, in a market that doesn't necessarily have. What I'm trying to say is, you have market inefficiencies, and a company like Glencore sees, just like us, that there is simply not enough copper in the world. And if we get involved in discovering, producing, whatever part of it is that you are in, you're trying to participate in the fact that the broader market isn't aware that right now copper is too cheap for the amount of demand and how little supply there is. So we share that in common with Glencore. Glencore thinks that copper should be, much more expensive, and so do we. The way we go about it is that we surround ourselves with smart geologists, and we raise money to go find copper. Glencore perhaps does that too, but then they also have, they trade physical metals, they invest in other companies, they buy assets. So, that's a much bigger strategy with many different talents and many different avenues, to try to exploit these market inefficiencies where we think copper should be trading at a much higher price than it is. So I'm happy to buy it for $3 a pound in order to sell it at $7. For us, our approach is much more simple. We don't have the resources that Glencore has. That's a long-standing organization that understands the flows of paper, the flows of physical commodities, and then they also understand how to produce these commodities and invest in others who are producing them or exploring for them. So they have a much more sophisticated model, but at the base principle, we all believe in the same thing, that these commodities are in short supply and great demand, and that there's an opportunity to invest and make money on those market inefficiencies.
Mm-hmm. And you also mentioned in your presentation before that now with the new government in the US, that there might be a trend that the mining is done in the US or in Canada, so very locally, so they don't need to import all the metals. And speaking about the new government, we also hear that maybe Mr. Trump is not that much in favor of the renewable energy. So these two trends, aren't they a bit contradictory for your business, or how do you judge the overall situation then?
Without being dragged into politics and saying what I think about how well-equipped Mr. Trump is to make these decisions, I would say that they are contradictory. I think that they're contradictory in practice over the 4-year presidency. I don't think that any politician has the power to overturn the huge demand for, first of all, the commodities themselves, and then also a constant evolution of how people consume energy and their behavior. Mm-hmm. So there is no stopping. That train has left the station long before Mr. Trump was elected and will continue to go long after he's not the president. I think that, even if Mr. Trump says, well, we don't care about the green energy, we don't need to promote clean power, we're going to drill, baby, drill, that's fine. We're still using fossil fuel around the world. But that doesn't mean that we are not going to continue to advance in other ways, and the demand for copper and uranium and nickel and all of these things is still, it doesn't break or it doesn't fix the market inefficiency. It may slow it down a little bit. I don't think so. I think it's going to speed it up. In the case of companies that have uranium, copper, nickel assets in the United States, this is only going to be a benefit because Mr. Trump is a contradiction himself. He wants to put tariffs on all of these materials that are being imported into the United States. A huge part of its GDP is based on the manufacturing of goods that require these things. And if he puts a 25% tariff on these things to import into the country, he's going to de facto make the price of those goods 25% more in his own country. So if he's saying that none of these things are important and he's putting a huge tariff on them, then where is that going to come from? It's going to put those of us who have assets in the United States at a huge advantage because he's going to have to produce them at home. Otherwise, he's actually going to be stubbing his own toe. So I think it's a very complex set of thoughts, something that goes well beyond a conversation we could have in half an hour or an hour. My conviction is that these physical commodities will continue to be more and more important as the world deglobalizes. When I was going to university, all of the talk was about globalization, free trade agreements, and the global village, so to speak. And today we are going completely backwards from that. And we're deglobalizing, we're putting on new tariffs. And so it's not just in the United States and Canada and some of the countries that we've talked about. This is going to be a global issue. These materials, if they're not going to be able to, the Glencore thesis on the price of copper is based on market inefficiency. Somewhere there is copper that is cheaper than it should be. And the more globalization and the more efficient markets get, the less that inefficiency exists. In a perfect market, there is no money to make. Hedge fund managers spend sometimes all their time and resources to skim just the smallest amount of spread,
which is more difficult
on arbitrage trades, right? Because the markets that they operate in are already so efficient that there's only so much to take in the middle. So if 10 years ago we had markets that were more efficient than they're going to be in 10 years, the spread between the prices on these commodities is only going to widen again, and there will only be more money to make for our investors and for Glencore and for everybody else who sees the importance of it. And I just think that there's an audience out there that has not ignored, because that's not fair. They're focused on things that I'm not aware of. So it's just an opportunity.
Yeah, but I believe the awareness is increasing, and definitely you're in an exceptional position. Just maybe if you allow one last question, how do you buy such a property to explore, to basically get the metals out of the ground? How do you need, just very good relationships, or how do you know about these properties, and how do you get them on the table in the end?
That's a good question, and I could take a lot of credit and say, well, because I have these great relationships and because I have a lot of experience. It doesn't involve those things. It's also partly because of the cycles in the market. When there is a lack of investment into any particular sector, it's like anything. When the real estate market is really hot, and you want to buy a house, in a ski resort, and everybody wants to buy a house in that ski resort, it's very hard to find. Everyone wants one, and they're very expensive. But when the economy is bad and people don't feel that good, and they don't have very much money, and they have to work more than they can ski, then there's probably more of a market for homes at the ski resort, and they're quite a bit cheaper. And that's a really key factor in getting properties, for example, like the ones that Greenbridge holds. You have to be able to, in a part of a cycle, be active for the part of the cycle that you're in. So when nobody else wants to be in that sector, that's the time to find assets. And when people start to come into the sector and recognize it, then you have to make sure that you're also prepared to bring liquidity to those assets, because you could just hold on to them until you go around and around. And it's simply just from my experience in equity capital markets, raising money, promoting companies. I've just gained the experience to kind of have an eye on certain things, and there was a place in time where I'm sure that it would have been very difficult to get any good assets, and I think that time is coming again. We're just smart enough, I guess, but lucky enough. I always say it's better to be lucky than it is to be smart. So I encourage the audience to take a look at what physical commodities are, recognize the importance of them, and know that if they start to go into this market and they're smart about which companies they pick, if they pick a good mix of different companies, depending on what the commodities that interest them, if somebody's really into Bitcoin and doesn't quite understand gold, then take a look at what gold represents, what's the same and what's different to crypto, and then look at the different companies that do it, the ones that explore for it at the very early stage, and then ultimately the ones that produce. Those are different risk profiles for an investor. So I wouldn't say just invest in one of those. Choose a few different companies and invest in those, and you will gain the conviction that eventually other people like you will see this opportunity, but you've been there first. And as the trade grows, it's just like every other thing that you've seen that gets hype around it. It takes time.
Yeah, I agree. And I also got into this physical commodity business a bit by investing my own money into it. And I'm very happy also now to follow your company and to see where it goes. And for the audience, we also did a podcast in German, Was dir deine Bank verschweigt, around commodities with Jochen Steiger from Commodity TV. So there are also very insightful tips and insights in general. So I encourage you to watch or listen to this podcast as well. David, thank you very much for being here and hosting the presentation in this beautiful house here in Zurich. And if you have any questions, as always, write us at hello@umushroom.com, and see you next time. Thank you very much.
Thank you.
Money! What Your Bank Doesn't Tell You, a podcast by UMushroom.